Good morning, everybody. It's Tuesday, November 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a half at 424 and a quarter. January soybeans were up a penny and a half at 987 and a quarter. And December Chicago wheat was up 6 at 541 and 3/4. Yesterday afternoon, the USDA was out with crop conditions. Winter wheat showed a pretty solid improvement at 55% in the good to excellent category. That was up from 49% a previous week and above the average of 45%. That crop is now 97% planted. That was up 3% on the week as well. Good morning, fellas. Ben, maybe kick us off with a few thoughts and comments here as we're coming in. We got a shortened trading week this week. Certainly first notice day coming towards the end of the week. So what are your thoughts? And then we'll kick it around the room.
I think we're in a situation where we're really chopping around. Spreads are probably surprising in a lot of ways, and everyone is trying to latch on to different narratives or different ideas or justifications. And in reality, we've just been in a 15-cent range in corn for the last 2 weeks, and we've been in probably a 25-cent range in soybeans. So, when you get markets like this there is a lot of potential. We're up against some pretty significant moving averages. There's a lot of people talking up a seasonal bean rally. And then you have all the outside noise, and people are trying to figure out how that translates back to price in corn and soybeans. And really, if you look at it, it's been a pretty benign trade price-wise, despite everything that's been going on around us. So just trying to personally just stay steady with what's happening until something changes. We are hitting up against some, we kind of shot through some moving averages on the upside, ran into a bunch of farmers selling, and now we're starting to toy with them again on the downside. Feels like maybe we're trading a little bit of different contracts, corn between here and inauguration, and soybeans from here to inauguration, and then corn and soybeans after inauguration. So
yeah, it was funny. We were talking before the show, and it's back to headline trading, on X and all the social media pieces. It's tariffs and policy, and what this is all going to mean. Justin, maybe a few thoughts and comments on what Ben was talking about.
Yeah, no, I agree. I mean, it's we're talking again before the show, but it's holiday markets. Remember more years than not that having a really, really strong opinion between Thanksgiving and Christmas, or even the end of the year, has been really tough. So, a lot of stuff's been priced in on the bearish side. We're kind of bouncing off of lows in beans. To Ben's point, we've been trending up in corn and ran into some good selling, and we have breaks and we run into some buying, but there's, nothing's really changed dramatically. I think we're all trying to figure out what, there's new tariff talk last night on, from Trump on Mexico and Canada, and trying to, fix some of these, drug issues that we're having across the border. And, so there's gonna be a lot of posturing trying to, figure out what all these things mean. For instance, you saw, that kind of talk, and canola is down sharply and soybean oil is up sharply, because we import a lot of veg oils, from Canada, a huge amount of canola actually for our renewable diesel. And obviously we've talked a lot about, Chinese used cooking oil imports. So, those are things that should, I think, be fixed anyway, because our taxpayers, we're paying for other feedstocks that, that money should at least be going to, I think, U.S. growers. So I do think some of those things will happen. And I think that's why it's probably dangerous to have a super strong opinion until you see how the dust settles on some of these policies. To Ben's point, I think after, first quarter next year, it's just going to be interesting. Right now we're kind of trading the same old news with, obviously big South America crop. I think that's obviously just going to keep weighing on prices, but we're under cost of production for a lot of producers in the country. So we've gotten down to levels that are, I think, factoring a lot of that in. So how much more do we need to break? I don't know if we have to or not.
Yeah, Dustin, what's on your mind?
Looking at next year, I think, trying to create certainty out of 2025 is very hard right now. So, you have to look at things like where Farm Bill could come in. They're proposing changes to that too, which should only probably get better. What the current expectation is, but that ratio is bounced again of NOV 25 beans divided by DH 25 corn. We hit a low here a couple of days ago, and that corresponded with funds, light net buyers of corn, light net sellers of wheat or of soybeans last week. And in my opinion, this is just purely opinion, we're so far below cost production at the university level that's going to lead a lot of people towards, beans on corn in the rotation instead of corn on corn. We've actually heard a lot of stories about beans on beans already. That's the plan for a lot of people that we've talked to. And so you have to start thinking, like, what does the world's balance sheet look like if we have 89 million acres of both corn and beans in 25 because of this? I think if we stop today during the planting window and all the decisions about where acres would be next year, I think that's a real possibility that we'd have an equal number of acres corn and beans next year. And the market should be, I think, a little concerned about that. We have plenty of beans to get us by. We still have to get through safrinha corn, for global stocks with the global stocks ex-China still near 10.5%. We have to get through their second season corn, which is not even planted yet. And we still have to get through U.S. season with a projection that we might not have, a huge amount of corn acres. A lot of talk online, people are saying corn on corn is going to be the answer. I don't see it on the balance sheets. You just go look at Farm Doc, go look at Purdue's 2025 crop budgets. We're seeing it anecdotally on our side. I think that there's a real possibility the market is misinterpreting how tight things could get if we have only 89 million acres of corn next year, if we have the slightest bit of yield loss. And so going into like what does a typical weather premium look like in that situation for corn? Do we need to go put that in and quickly to try to get those acres back during this discovery window? So I think those are the questions I'd like to see answered in the next couple of months. If we go to March 1 and we're at today's prices, it could get really interesting for corn going into late 2025, in my opinion.
Yeah, that's the tricky part, right? We talked about this. It's like you kind of look at, or at least we traditionally look at what that ratio is, and I think we're at 2.35, kind of like a long-term average. So it's a 2.34 this morning. So not really one way or the other to say that that's really pulling acres. But then you got to look at flat price, and so like when you typically have a higher flat price, the ratio has to do more work to get away from corn acres just because the total revenue dollars are so high. And vice versa, when you have low flat price, it's the opposite. We saw this happen in 16, 17, 18, similar type situations where just the total dollars available. We've talked about that a lot here. The other side, the flip side would be, growers that are coming off of, 260, 270 bushel corn yields, might feel a little more confident that their yields next year will be higher too, rightly or wrongly. And they feel like, by looking at the numbers, seeing so much red on the balance sheet to start, or their P&L, to plug in higher corn yields to make you feel better about what your outlook is could also happen in some cases, especially like in the ice states where growers might be, again, I think incorrectly, but be saying that I can grow 250 bushel corn no matter what now. And, beans, I'm not sure. They might be 80 or 90, but they might only be 60. So sometimes I do have noticed that not really a realistic expectation on the two different crops. Should be just obviously based on your APH and your history. But that's the one caveat I could see is just, kind of when people get desperate, it's how do I sell some premium in corn, and just I have to plan on growing 250 bushel corn to make this work, which, doesn't work out that way. But
yeah, we've seen, years where you get, heavy accumulators and, option selling and things of that nature. And then something changes a little bit and it can be massively explosive when some stuff like that happens.
Well, look at 21, for example. In 2020, you couldn't convince anyone that there was anything that could ever change the market to go back higher, even after the phase 1 trade deal was inked. And, China had not initially bought right out of the gate, at least not showing up on, on those export sales reports at mid 2020 mark. And granted, we had COVID. There's a lot of things that are very negative as far as headlines are concerned, but the price had doubled within 8-9 months from then, and it really didn't take much for that to happen. It took China starting to buy and starting to do that. So we've heard a lot of this, like people talking about, well, I need to do whatever I can to get the value out of it. I need to grow the 250 bushel crop. I also am going to go sell my corn all on accumulators because that shows a premium price to me. And then something doesn't work out in that plan, right? Like either we do go into some sort of a renegotiation on the phase 1 trade deal with China, market goes up, and all of a sudden your double ups, put you into a guaranteed loss for the year in that situation. Yep. So I don't think now is the time to have a strong opinion about the market. To Justin's point, going into holiday markets, you got to kind of let the chips fall where they may a little bit, and then play to the plan B type floors that you have, whether that's bridging yourself to get to crop insurance or relying on farm bill to some extent as part of your marketing plan. So I think that's just one thing we're trying to keep things on an even keel and not get too opinionated right now.
Yeah, and I would say, Justin, just to that point, like this is probably the earliest I can ever remember even talking about crop insurance. And we're already doing it, talking about strategies and corn versus beans and what's available and the farm bill. So I think there's going to be a lot of, in these kind of environments, you have to get kind of, think outside the box a little bit on how you want to protect your risk and really realizing what it is. Because I think just looking at flat price and saying it's going to go higher or lower from here is going to be really tough.
Yeah, Justin brings up a good point. Those are things that we are discussing, every day. So for those folks that, maybe want to bounce some ideas or hear about some of the things we're doing, just give us a shout. Always willing to talk and chat with folks. So you can always reach us there. I know the numbers at the bottom of the screen. Real quickly, Rylan, we're going to be coming into the open. A lot of excitement yesterday in the feeder cattle market, obviously with the screw worm out of Mexico and what this is all going to mean. So maybe shed some light on that piece and what your thoughts are for the day.
Yeah, naturally the market rallied really strong after the open. There was just a lot of panic. Open interest was actually down about 1,400 contracts. So it seemed like you got the shorts, anybody that was carrying a big short position probably out, and maybe even some profit taking from those longs. I mean, we just traded to a level that we hadn't seen until July. So, I mean, the news is definitely on the friendly side. I think this kind of exacerbates some of the chatter that we've already been discussing here, just with the potential 25% import tariffs on Mexico. So, the issues surrounding this, a lot of that I think was kind of baked into the market already, but it seems like the restrictions are at least in effect for 30 days. That could change depending on the severity of the situation, but overall it's still going to be monitored here. So I wouldn't be surprised to see anybody that was waiting to hedge look to maybe get a little bit more on, but it's an evolving situation, and definitely I think the sentiment right now is still pretty friendly overall in the cattle complex. We've seen beef prices higher past couple of days. Choice was up 230 in the afternoon. Haven't seen any cash trade yet, but just based on last week's performance and the beef performance this week, wouldn't be surprised to see another round of higher sales to kind of add a little bit more support to the market here. We had the cold storage report. Cattle market tends to brush over this, but total pounds of beef and freezers were up 5% from the previous month, but still down 3% from last year. So I don't think these are really earth-shattering numbers overall. And on the hog side of things, same thing. I think the market, it kind of justifies, I think, especially what's been happening, the bellies down 8% from last month and down 42% from last year. So it just seems like there's, the supply narrative that things are still pretty tight here on the pork side of the market, and that demand should stay pretty firm, especially if Mexico is going to try to front run some tariffs. So it seems like it's a big justification for where we're at right now. And I would be, I would think that somebody at least had the inclination to maybe cover some risk well into the potential tariffs going in on January. So we'll see how it shakes up, but all the news is generally on the friendly side. Cut was up. So we'll see. It could be another wild ride in the cattle market today.
Very good. Appreciate the update there, Rylan. We just came into the open, got December corn down 3/4 right now at 424.5. January soybeans are down about a penny at 985, and December Chicago wheat's up 5.5 at 541.25. One thing to note, tomorrow we will have full markets, so it'll be a full close on Wednesday, and then we will be shut down on Thursday there for Thanksgiving, and then a reopen on Friday morning. So appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It certainly helps us, and it'll keep you up to speed on everything that's going on with AgYield. So once again, thanks to everybody that supports the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.